Hello everyone, thanks for joining us today and welcome to the actually last specialist trading educational presentation of the year. But that's okay, we saved the best for last because today I want to talk to you about 2 trading rules that can help you become a more consistent trader. And the reason why I say we've saved the best for last in our last presentation of the year is because these 2 trading rules I'm going to present today and teach you are virtually found in just about 99.9% of all of our methods, all of our techniques, and all of our strategies in some capacity, and one way or another, in our what we teach all of our students around the world. In fact, let me share with you this first example here. Here's an older chart of MYGN. Now, someone looking at this would say, well, there's really not a lot of movement here, Steve, not a lot of action. In fact, we're in a range market. See how we're just kind of going sideways? And that chat room I go to says to stay away from range markets because there's no direction, and you'll most likely get whipsaw. But with these 2 rules I'm going to share with you today, they actually would have identified a buy signal right here, and then another one right after that. So everyone was most likely saying there's nothing happening here, we're just basically going sideways in a range or whipsaw market. You could have jumped the gun and, if you had chosen to do so, purchase MYGN prior to a 20-point gain in the next 3 days. Now, this is a very simple process, and in fact, that's going to be the theme of today, but we're also going to share with you how simple it is to apply this on our platform. This is the PTS Primo Charting Platform, the trading educational platform that actually you've been searching for because it really teaches you how to trade and how to find and identify these 2 rules. So welcome to our last presentation of the year. My name is Stephen Primo, President and Founder of Specialist Trading. If this is your first webinar that you've attended in my classes that I give on a weekly basis, well, guess what? We are all about teaching and educating. I traded through the crash of 1987, every market environment you can think of. And on top of that, any system, any technique, any brand new strategy or method that has just hit the markets, trust me, it's been around before. It's just been renamed, rebranded. So I most likely traded it as well. So in my 43 years of trading, I know what works in terms of consistency and I know what doesn't. So why waste your hard-earned money and your time searching for that holy grail when it really is right here in front of you? It's education that we provide for you, okay? So this is what we do at Specialist Trading. We are first and foremost an educational company, and we have educated students around the world in over 115 countries and in virtually every state in the United States. We've got some great testimonials from not only first-time traders this past year, but traders who've been trading for 20, 30 years. We even have some hedge fund managers who are students of ours who have just, really thanked us for the job in turning their trading around this past year. And hopefully we'll be able to do that for you as well. Now, before we begin, we are first required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 2 rules today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future, and also please remember that all examples are strictly for educational purposes only. As I said earlier, we are required to share this with you, so please take a moment to view it. And also, as you're taking a brief moment to view the disclaimer, if you haven't done so already, there are a lot of new names in this class today. So if you haven't done so, please feel free to follow us on Twitter. There's our handle right there. You may want to copy it down. I post different information on a daily basis, anywhere from little bits of financial wisdom I've accumulated to actual signals in our strategies that have been generated lately. In fact, these are signals in all markets. I know we have a propensity to share mostly stock signals, but trust me, we have signals in forex markets, in commodities, in futures, as well as stock markets, even in Bitcoin. So all of our methods can be transferred over onto any market in time frame. So there's a lot of great free information. Feel free to follow us on Twitter. Now remember, as I stated in the opening statements, we are different from other companies in that we are first and foremost an educational company. So if you've come here today thinking that, well, gosh, this guy I heard about, Steve Primo, he's going to tell me what I should buy for the coming year, or he's going to tell me about the new hot market in 2020, or he's going to say what the perfect time frame is. Remember, you've come to the wrong place if that's what you're looking for. I know so many of the webinars promise that, and in my opinion, that's why most students fail, because you're tagging on to someone who really has shown no levels of consistency in their trading and has really not been around long enough to teach you these things. All we do, and all we really want to instill in all of our students around the world is simply education that has stood the test of time so that you can make your own trading decisions, not us. We're not here to tell you the perfect time frame. We're not here to tell you the perfect market, the hot new market or the hot new stock. We don't believe in that because, once again, once you start following what other people are telling you, you've taken yourself out of the game. And I can't think of a better way to lose money than to not make your own decisions. You have to be able to have the education to make your own decisions. That's the only way, in my opinion, one becomes a consistent trader. So as you see here, my goal is not to force feed you signals. It's not to tell you what market or time frame to trade. My goal is simply to teach you how to trade with the specialist edge. Now, when I first started trading some 43 years ago, I struggled just like probably many of you today are struggling. And I know what it's like. It's extremely discouraging. It's very, very frustrating. And I was lucky enough to have some mentors who taught me these same things that I teach my students now. So this is what's called the specialist edge. The same edge that sustained me 43 years ago and has sustained me all this time. Hopefully, what I teach you will be able to do the same, okay? So you'll get a bit of that teaching and trading in today's class. Now, before we begin, once again, we see a lot of new names and faces here today. If you're new to my webinars, we love to take as many questions as possible, but please wait till the end of class. I don't like to stop at each slide because if we do that, we'll probably be here far too long. And I don't want to take the last trading day of the year all up and just talking for you. I know you have a lot of things getting prepared for the new year. So please, if you have a question, just wait till the end of today's presentation. I promise I'll get to each and every one of them. The only question I will answer is this, and that is this being recorded? Yes, it is. We record all of our webinars. So at the end of the presentation, if you're having difficulty with sound or seeing this, or if you have to leave early, don't worry. We will provide each and every one of you a link to this recording, okay? So remember, please wait till the end of class today to ask any questions. Now, with that stated, I want to start out with a little bit of financial wisdom. This is something we talk about on our Twitter page. It's also something that my mentors taught me, and this is the theme of today's presentation. Because one of the first things my mentors taught me was this. They said, Steve, it is the easiest thing in the world to overcomplicate your trading. I mean, think of it. Any trader can do that. It doesn't matter if you've been trading 30 years, 30 minutes, a couple of weeks. It makes no difference. It's the easiest thing in the world to overcomplicate and to throw more things onto your trading plan. But conversely, it is the most difficult thing in the world to simplify your trading. I mean, think of it. We've all been taught, myself included, these things that are supposed to work. There's traditional wisdom. You're supposed to look at volume. You're supposed to listen to all the guys in the chat room. They know what they're talking about. These guys on TV, the trading gurus. You're supposed to look at earnings. You're supposed to look at jobless claims, financial reports. All these things matter, right? Well, trust me, I used all these things over 4 decades ago, and they couldn't make me a dime. It wasn't until I started stripping them away. My mentors called these things useless noise because they really didn't have any levels of consistency to them. They were too subjective. It took me a while to do this, by the way. It was very, very frightening because I was always taught this is what's supposed to work. But after a while, I saw that it really wasn't working, and I stopped using them. In fact, I haven't looked at news in over 4 decades now. I don't look at that. I don't look at earnings reports, jobless claims. I don't listen to the so-called pundits on TV. The only thing I look at is the source, and that's the chart in front of me. So as you see here, it's very easy to make your trading more complicated. In fact, that's really what stands in the way of your success. But it's very difficult and very courageous to strip away these things and to simplify your trading. But once you do, you're in for the ride of your life because that's when you start to become consistent and trading starts to become simple. And you can just see what's going to unfold right in front of you. And it's very hard to grasp in the beginning, but once you do, you will wonder why you clung on to these things that really showed no levels of consistency. Now today, these 2 rules I'm going to share with you, I'm sure most of you are going to say, this is too simple. I mean, this can't work. I mean, why would I want to use this? I could have figured this out myself eventually. Well, if you could have, then why aren't you using it? It's because we feel that we've been taught the more complicated something is, the more valid it's going to be, the more money it's going to make us, right? But in my 43 years, if there's one thing I've learned, it's the opposite. It's that those things really don't have levels of consistency. It's the simple things that work. I mean, if you ever look at a trader who's been trading for a relative short amount of time, 5 to 10 years, it's really short. Most of their trading methods are extremely complicated, like 10 to 20 rules, a lot of convoluted logic, a lot of information, a lot of indicators. You have no idea what they're based off of. But if you look at the guys who have been trading 30, 40, 50 years, their trading plans are extremely simple. 3 to 5 trading rules tops, maybe one indicator. That's it. Now, that's what we mean by simplifying your trading. But once you do that, you'll get onto that road to consistency, okay? So this is the theme of today. Simplicity is really what is at the root of consistency. Okay, so now that you understand our philosophy for today, let's begin today's presentation. Let's go over the 2 rules. Once again, they're extremely simple, but extremely powerful. The first rule is, if you get a buy signal, whatever strategy or method you're trading, it can only be entered above the 50-period moving average. So in other words, whatever strategy, whatever method you're trading, your buy signal has to be generated above the 50-period moving average. Now, even a more aggressive approach, even if you have all the bars below the 50, but your entry has to be above. It cannot be below. Why? Well, let's look at this generic chart right here. Someone looking at this would say, well, Steve, there's absolutely no idea what we're doing here. We're kind of in a rangy trend. We're going down, back up, back down. But that's really not true. See, this is the way I used to trade. Say, well, this is a whipsaw market. But in reality, once we apply our buy-sell line, this is basically the 50-period moving average, it tells us the overall trend. Because if price is below, the overall trend is down. That means we don't want to be buying if the overall trend is down. But if price is above, what is the market telling us? Not some guy on TV, not some guy in a chat room. What is the market telling us? It's telling us the overall trend is up. Therefore, we only want to be in sync with the overall trend. So we only take buy signals if they are above the 50-period moving average. That will ensure that you're in sync with the overall trend, and automatically you've increased your odds for consistency tremendously. I've often told my students, if I were stranded on a desert island and I could only use one technique that I've accumulated in my 43 years, it would be this, the 50-period moving average. Now, let's just turn it upside down. If we want to sell, well, obviously sell signals can only be entered below the 50-period moving average. So I don't care if the market has gone up and all you indicators, if some guy in the chat room says, oh my goodness, it's tremendously overbought, you have to short this. If you're above the 50, the odds will be against you. Why? Because you're out of sync with the overall trend. If you go short, you should be below the 50-period moving average. Now, granted, there will be some great buys below the 50 and some great sells above. But remember, we're trying to instill in all of our students around the world, and today in this free webinar, is consistency. And over time, if you do this, you will have more consistency. Sure, you'll get a couple of really great sells above the 50 and buys below the 50. But over time, if you keep doing that, you'll have nothing to show for it. Trust me, I did that 43 years ago, and it didn't work then. So it's not about to start working now. All right, another generic chart here. Once again, absolutely no direction. We're going down, back up, back down, but that's not true. This is the way we're always taught, but let me share with you what my mentors taught me. Once you apply the 50-period moving average, the first thing you ask yourself is, where is price in relation to that 50-period? If price is below, then what is the market? Not some guy on TV, not some institution or the banks. What is the market telling you? It's telling you the overall trend is down. So you don't want to buck the trend. That's like swimming upstream. Why would you do that? Sure, you can swim from one place to the other going against the current, but it'll take you a long time to get there. You'll be exhausted, and it won't be a very enjoyable experience, right? Why not just swim with the current at your back? That's what you get when you apply the 50-period moving average, all right? So that's rule number 1. You can apply this to any strategy, any method. In fact, I would almost dare you right now to go back and look at your last 10 or 20 trades that you've taken, all right? I can almost guarantee you that your losses were due to the fact that you were buying below the 50 and selling above the 50. It makes no difference what it's based on. It could be based off fundamental news, could be based off the tides of the ocean. It makes no difference. You will have a higher level of consistency if you only trade in sync with the 50-period moving average. All right, that's how we find the overall trend. Now, how do we find the short-term trend? We want to be able to get in sync the short-term with the overall. Well, here's rule number 2. What we want to do is look for this. Buy signal bars must close in the top 25% of their range. Okay, so what does that mean, the top 25% of their range? Well, if you're above the 50, you want to see a bar like this. You see, if you divide this by 4 separate but equal parts, that top 25% is where you want to close. Why? Because that's the market telling you that it wants to go higher on the short term. So now you have the short term in sync with the overall longer term. All right? This is an even higher level of consistency. So once again, let's say you have a buy signal based off the earnings. All right? Now, if that bar that closes where all the rules are met and all the requirements are met closes at the bottom portion of its range, even though it's above the 50, I would not buy it. I would wait for the first bar that closes in the top 25%, just like you're seeing right now. All right, let's look at this generic example again. Let's show you how consistent this technique is. For example, these two bars closed in the top 25% of their range, and look what happened. We went up a little bit after this one. Now, for all we know, this could be monthly bars. These are generic bars. So you went up for about 5 or 6 months, maybe, if these were monthly bars. But on this one, look what happened, okay? So you see the level of consistency you're giving yourself when you're above the 50 and you're only entering based off bars that close in the top 25% of their range. It's the same thing with going short. Sell signal bars, regardless of what they're based on, must close in the bottom quarter of their range. So let's say your strategy, let's say it's based off of the institutions, okay? All right, you're below the 50, so you say, okay, well, I'm in sync with what Steve says for rule number 1, but let's say the bar closes in the middle of its range. Well, I would not take that because why? Because the market on the short term is not telling you it wants to go lower. It's basically kind of neither here nor there. What you want to do is enter on the first bar that closes in the bottom portion of its range. It looks something like this, okay? So to calculate that, you simply divide by 4. If you close in that bottom quarter, well, then it's okay to go short. For example, the market is telling you it wants to go lower on the short term, so you have the short-term trend and the overall trend in sync now. Now you have a high level of consistency behind you, and it's okay to take that trade. For example, we looked at this chart before. All right, we're below the 50-period moving average. Let's say this is the bar where we get the signal on. It closed in the bottom 25%. And look what happens after that. You will have a higher level of consistency if you apply these two rules to your current method, or maybe even devise a method based off these. These were some of the first 2 rules I learned 43 years ago from my mentors when I was struggling tremendously. And I said, but wait a minute, I mean, don't we have to look at the earnings? Don't we have to look at what the institutions are doing? I mean, maybe there's some Fibonacci support, or maybe the Elliott wave is a count 5 and I shouldn't buy this. And they said, Steve, listen, there is no level of consistency in those things. They just do not have any consistency. They're too subjective. What we would suggest is to strip all those things away, don't even focus on them, and focus on what the market is telling you, the chart in front of you. It was very difficult for me to grasp at first. I didn't want to do it. So I traded the next couple of months using my same tired traditional wisdom, and I kept losing money. So finally I said, okay, I'm willing to try this stuff. And that's when my trading slowly but surely started to turn around. And I continue to use these on a daily basis on my own personal trading. Now, here's the good news. These 2 rules, which I just shared with you, make up half of one of our most popular and consistent strategies. Strategy number 4. This strategy is traded by more students around the world and in the United States than any other method we have. Why? Because it can be traded on any market, any time frame, any direction, and it incorporates these 2 rules. So let me share with you some of the highlights of this method. This is the first method, by the way, my mentors taught me, and I trade this in some capacity on a daily basis. Or, for example, I traded this morning. Now, Strategy 4 was originally designed for traders looking to catch momentum, and we used to trade this in and out of the markets in 5 minutes, but we've devised ways in our courses to stay in strategy number 4 trades for days, weeks, even months if you'd like, all right? It's a pattern recognition strategy, so we're looking to find a defined pattern that happens and occurs over and over again in any market and in any time frame. It only uses one indicator. That's how simple this strategy is. And guess what? You already know what it is. It's the 50-period moving average because it tells us whether we should be buying or selling. You also have rule number 2, we're only going to enter on a bar that closes in the top or bottom 25%. The remaining 2 rules I can't divulge right now. I know a lot of you are going to be saying, gosh, Steve, this is great. What's the last couple of rules? And where would I exit? Where would I place my stop? Where would I enter exactly? Well, we teach all these things in the courses. It wouldn't be fair to our students around the world who have already purchased this course, and then if I gave away all the rules. That would be like you going out to a New Year's Eve restaurant tonight and having dinner, and you have to pay for the meal, but everyone else got it free. That wouldn't be fair, okay? So we can't give away everything, but I've given you half of the rules to this particular method. So let's look at some more recent strategy number 4 examples. And by recent, some of these examples are going to be a little bit older, but I'm going to share with you one at the very end of today's presentation that actually was could have been generated in the last 3 weeks that generated some really nice gains, okay? Now, all of these presentations, or all of these, I should say, displays were presented on our platform, the PTS Primo Charting Platform that generates strategy number 4 setups. I'll show you the method and the process that we incorporated when I designed this with ProTrader Strategies so that it can make it simple for you to identify strategy number 4 setups, okay? For example, let's look at MYGM. Remember we talked about that earlier today? That was the first slide I shared with you. Someone looking at this would say, Steve, this is a range market. I mean, how can I get involved in this? Because it's probably going to be going sideways for the next month. Remember, that's not true. What's that based off of? It's based off of inconsistencies that we don't use in any of our teaching. The first thing we teach our students is to apply the buy-sell line. That's the 50-period moving average. And we made it simple on our platform because it's right here in the top left-hand corner. All you have to do is click that on and a drop-down menu appears. Now, there are 4 different ways to apply it. Let's use the simplest, which is just the 50-period moving average, okay? And once we apply that, we ask ourselves, where is price in relation to that 50? Price is above, right? So even though it appears as if the market is doing nothing and going in a sideways range, it's actually telling you that the overall trend is up. Do you want to sell in an overall trend, uptrend? No. So for all intents and purposes, you would still be viewing this as a buying opportunity. Now you have to apply the second rule, which is to look for bars that close in the top 25% of their range. And guess what? We have 2 right here, all right? Now, the 2 remaining rules, which we teach you in the course, you think have been met. You think that these are possibly strategy number 4 setups. The first 2 rules have been met, and you think the second 2 have been met. So here's a way to check your work, because trust me, as your teacher and mentor, I would love to be sitting next to you as you learn this, the way my mentors taught me. But I can't do this to literally thousands of students around the world, so we devised the platform to make it simple. So let's say in the course studies, you think you can properly identify strategy number 4 setups. So what you do next is click on strategy number 4 in our green strategy tab. In the drop-down menu, click on signal arrows. And this is a way to check your work, because ultimately we want you to be able to identify them without arrows. That's the way I identify setups. I don't even need to use these. I know exactly where a strategy number 4 signal is. I don't need an arrow to tell me now. And I want to get you to that level as well. But in the beginning, while you're learning, we provided this for you as an educational tool. So click on signal arrows, and guess what? This is how you confirm if you're learning correctly. These are 2 valid signals. Now, had you taken these signals where everyone else thought you were in a sideways market, you could have potentially captured 20 points in 3 days. Now, did we know it was going to go up 3 points? Absolutely not. We just knew that the market, not some guy in a chat room, which we don't have at Specialist Trading, not some guy on TV, which we don't require you to look at, but we require you to look at the market. That's the source. The market was telling you it wanted to go higher. Now, in the class, we give you upwards of 7 different exit points, 7 different entry points, and 7 different stop placements. It's up to you to decide which one you want to apply. So we can have 2 or 3 different students take the exact same signal and come up with different results. Is that wrong? Is that a bad strategy? No, that's what we encourage, because remember, as I stated, the only way one can become consistent in trading is by making your own trading decisions. This means you have to decide where you want to exit. You have to decide where you want to enter, not me. I'm not going to tell you that. I'm going to provide you with the information and work with you to help you decide what type of trader you want to be. But ultimately, it's your choice. If you've been going to a chat room finding out what to buy or sell and where to exit, if you've been listening to some guys on TV, well, what you're doing is you're telling the markets, listen, I'm not good enough to make my own decisions, so I'll let someone I don't know or someone I have no idea if they're any better than me make the decisions for me. I mean, that would be like an airline pilot in the middle of the flight asking all the passengers, how do you think I should land this? Okay, I'm going to depend on you guys to tell me what to do. But traders do this every day. In fact, some people pay money to have someone else give them the signals. Trust me, I'm right there. I did that 40 years ago and it didn't work. So there's no way to become consistent if you rely on someone or something else. That's why we created specialist trading. That's why I teamed up with Pro Trader Strategies to give you this information so that you can make your own decisions. All right, here's another example in the spiders. This is an older example here. Once again, someone looking at this would say, well, Steve, obviously this is in an uptrend, right? We're making higher highs and we're making higher lows. So that's what I've always been taught. I'm listening to the chart. The chart is telling me it's going higher, right? Well, sure, it's telling you it's going higher, but what is the overall trend telling you? So we click on buy sell line, click on 50-period moving average, and even though we had one close above, the majority of the bars are closing below. So the overall trend is down. Now, a lot of students say, well, Steve, how do I know how many bars above or below determine the overall trend? The rule of thumb is 3 to 5 closes either above or below will confirm that the trend is either up or down. So we only had one close above and then we were right back down below. So that's still telling you the majority of the bars are below, the overall trend is down. So even though you may tell yourself, well, Steve, the market's telling me it's going higher. Sure, it's going higher in an overall downtrend. So this is actually an opportunity to sell. Now, what do you see here? A bar that closes in the bottom 25% of its range, and it's below the 50-period moving average. So that's rule number 2, okay? And now you say to yourself, well, you know what? The first 2 rules of strategy 4 have been identified and confirmed, and the other 2 rules, which they taught me in the course, have been confirmed as well, according to what I've been taught so far and what I've learned. So you know what? I'm going to check my work, see if I'm right. Click on strategy 4, click on signal arrows, and guess what? You're right. You're starting to learn how to properly identify a strategy number 4 signal. This is the point at which I want to get you to as your instructor, as your mentor. I want you to get to the point where you can identify these on your own. You won't have to rely on arrows. You won't have to rely on what you've done before, gone to a chat room in 2019, and now you see that you've lost more money than you've gained. I don't want you to wind up losing all your money. I want you to identify and make your own decisions. So this is a valid strategy number 4 signal in the spiders, and look what happened. In the next couple of weeks, it fell 12 points. I know it doesn't seem like a lot, but that transferred over onto 1,100 Dow Jones points, okay? So do you think this could have helped you last year? So let's look at some more strategy number 4 signals just to get that process under your belt and see how simple it is to actually apply this method. Here's an example, an old example in CPA. We're above the 50. We close in the top 25%. A valid buy signal has been generated, and in 1 week, the stock gained 9 points. GPC, this is a more advanced signal because it was only one close below the 50-period moving average. Remember, we usually tell our students to look for 3 to 5 closes below, but some of our advanced students say, you know what, Steve, I only care if it's one close above and a signal is generated. That's enough for me. So remember, you're in charge. That's a more advanced and a more aggressive way to trade this, but it would have worked out here in GPC because the market quickly fell 10 points. Now, another example here in ZROZ, we are above the 50-period moving average. We have one close below, but 2 signals were generated, and they are above the 50. They both close in the top 25% of their range, and in the following week, a quick 14 points to the upside. Following the 2 rules again in Acer, we are below the 50, so what's that telling us? That's telling us that the overall trend is down, not from some guy on TV, and not even from me, but from the market. The market is telling you the overall trend is down, so you should be looking at this from a seller's perspective. Now we look for the remaining rules to be met. Here's closes in the bottom 25%. Now I'm sure you say, well, Steve, here's a close in the bottom 25%. Here's another one. Here's another one right here. Why aren't these signals? Because remember, there are still 2 more rules that have to be met according to this pattern, and they didn't fit the requirements. But these 2 did, and had you taken these and simply waited a while, you could have taken advantage of this 15-point drop. VRSN, here we see one close below, but then right back closing above. It closed in the top portion of its range, a buy signal was generated, and 24 points in the following month. How about NEWR? Here's a little bit more advanced because we're closing above, closing below, closing above, closing below, closing above, but then we finally close below. All right, a little bit more aggressive. We close at the bottom 25% of the range, and all of the remaining requirements of strategy 4 have been met. So it would have been up to you if you're a more aggressive or advanced trader. You could have taken this, but that would have been the wise decision because in 3 days, the stock dropped 32 points. Now remember, there was obviously some news or some announcement or something going on with the company that caused this to drop 32 points in 3 days. Now, most students would say, well, Steve, I thought you don't look at news or stuff that's happening within the company. We don't. We don't look at that at all. It's not required. If you want to, you can. I'm not going to tell you you can't do that. But this is what my mentors taught me, and this is what I teach our students. The market tells you just about everything you need to know, the chart in front of you. So there's no reason to use what they called useless noise. Now remember, you can if you want to, but I stopped looking at news and fundamental requirements years ago, 40 years ago. So if I'm still here trading after 40 years, don't you think that you can be? Sure, if you're investing for the long term and you need to know the inner workings of a company, that's fine if you're long-term investing. But if you're holding things the way most traders do for a couple of weeks to maybe a couple of months, there's absolutely, in my opinion, no reason to follow any news events or to rely so much on them. This stock fell 32 points in 3 days without any requirement of looking at news or fundamental information. The only information we took was from the source, the chart in front of us. Here's another example, a 22-point gain based off some news, some jump up. The only reason we bought this is because all the requirements of strategy 4 had been met. Tesla, when Tesla was in a strong downtrend, all right, a strategy number 4 signal was generated. Rule number 1, we're below the 50. Rule number 2, we closed in the bottom 25%, and all the remaining requirements were met for a 70-point potential gain to the downside. You could have bought some puts in this. Remember, how you want to enter is up to you. You don't have to short the stock. I know it's an expensive stock. Most people wouldn't be shorting this actually, but you could have bought puts. You could have used some spread, some option spread with a bias to the downside. It's entirely up to you. Let's look at some different time frames because we know that not everyone trades daily bar charts, okay? Here's a weekly chart of Halliburton. We are below the 50, so nothing changes just because we change the time frame. And we're looking for bars that close in the bottom 25%. And look at all these sell signals that you could have taken advantage of, okay? Some better than others, but in our advanced courses, we teach you which are the the higher probability ones. Here's a weekly chart of PSA. Most students would say nothing much happening here, but actually, is there resistance? Well, no, really. If you use the buy-sell line, there is a lot happening here. The market's telling you the overall trend is up. So you want to have a buyer's perspective. You apply the signal arrows and you see that there was a buy signal right here. It met all of the requirements. And in fact, another one was generated the next week. So you had 2 weeks to get long PSA before a 30-point jump, okay? Now, we can use this as a market directional tool. A lot of students actually don't use it for trading, but they use it as a directional tool. They apply it to ETFs or to indexes, and when these indexes generate a signal, well, then that tells them what the corresponding market is most likely to do. For example, here's an older chart in the spiders, okay? Now, we had this more aggressive approach where one close above, but then we close right back down below. So for all intents and purposes, the overall trend is still down, all right? We close in the bottom 25%. So that's rule number 2 that has been met. Now, the remaining 2 requirements have been met as well. So this is a valid strategy number 4 sell signal. So does that mean you have to actually trade the spiders? No, because the spiders is the ETF that represents the S&P 500. So it stands to reason, it's logical that if the spiders are having a sell signal, isn't that basically telling you that the S&P 500 is having a sell signal? So maybe you want to short a stock that you trade that's in the S&P 500, or maybe you're short a stock already. This will give you more confidence to stay in the trade because most likely the market will follow suit. Either way, you could use this as a directional tool as opposed to actually trading the spiders, because the spiders fell 27 points. That was earlier in the year, 2019. And that corresponded to 3,200 points in 3 weeks in the Dow. So if you'd like to use this as a directional tool for an ETF or something that follows a particular sector, or for maybe on the Dow or the Russell 2000 or the maybe on the QQQs, it's entirely up to you, because you can apply this, once again, to any market, any time frame, and any direction. So let's recap now before we go into the question and answer portion. You can start your New Year's off. Remember, if there's one thing you learned today, it's to apply the buy-sell line. I stated earlier, this is the most important tool we have here at Specialist Trading. If I were stranded on a desert island and could only use one tool, it would be this. Now, the buy-sell line is something that's not really, that difficult to figure out. It's the 50-period moving average. But we ask you to apply the 50-period moving average and then only trade in sync with it. So you're only going to take buy sells that are above the 50 period and only take sell signals that are below the 50. Once you get those signals, now you go on to the second rule, which is the top bottom 25%. In other words, if your signal is generated as a buy signal, it must close in the top 25% of its range. That's where all the requirements have been met, and you finally finalize the setup on a signal bar. It should close in the top portion of its range if it's a valid signal. Conversely, if you get a sell signal, whatever method you're trading, whenever all the rules have been the requirements have come to be met and you now have a valid setup, that signal bar must close in the bottom 25%, or you won't have a high level of consistency. You want to have the short term, which is the top bottom 25%, in sync with the overall longer term, which is the buy sell line. Now, the good news is these are the first two rules that make up one of our most consistent methods. That's strategy number 4. I just shared with you a lot of examples and showing you how simple it is to apply this on the new PTS Primo Charting Platform. This is a platform I developed with Pro Trader Strategies with one goal in mind, and that was to educate you as traders. So ask yourself, before you ask me questions, do you think these two trading rules can help your trading starting in 2020? How would you like to incorporate them with strategy number 4? Well, we have a great attendee discount for all of you taking time out of the last day of the trading year to join me today. We're going to give you a great discount on strategy number 4, all right? This includes all of the entries, all of the exits, and all the stop placements for you to choose from. You're going to get the automatic buy and sell arrows for you to learn from. It's instant course access, okay? But on top of that, we're going to throw in our new platform. This is the PTS Primo Charting Platform. We're going to give you 6 months of this so you can really learn how to properly identify these setups with strategy number 4. Now, 6 months would normally cost you close to $1,000. We're not going to charge you $1,000. We're going to discount that deeply. In fact, it's so deep, we're not going to charge you anything. You're going to get 6 months entirely free of our platform. But we're not going to just stop there with giving you strategy 4. We're going to also throw in a lot of extra features, such as the 4 buy-sell line features, okay? You're not only getting the 50-period moving average, but 3 more different ways in which to view strategy number 4 with different ways of applying the buy-sell line. We also have a proprietary exit levels. This is a great tool. One of our different exit levels is automated on our platform. If you go on our Twitter page, you'll see a lot of examples where we apply this. It can really help you with the markets. Over 90 of the most prominent technical indicators, if you'd like to experiment. We have a strength of trend tool. This is a tool I devised with Pro Trader Strategies that has an uncanny ability to find out and to sense if a current trend is running out of steam or if it still has some momentum left in it. And some great technical support. We have testimonials from all over the world telling us how great our tech support team is. But one of the best things included in this offer for 6 months is the signal scanner. Why? Let me show you how simple it is to apply. On the strategy number 4 drop-down menu where you were clicking on signal arrows, all you have to do is click on scanner and you'll see this page appear, okay? What you want to do now is click on load symbols. We provide you with different lists of different exchanges, different markets, currency pairs, futures, Bitcoin, stocks. And then once you decide whatever market, whatever index or whatever spreadsheet you want to see, click on load symbols, and in less than 30 seconds, you'll see it appear on your screen. After you see that, click on scan, and it automatically scans for buy and sell signals. you'll see a series of green and red horizontal bars. The green bars mean that there's a corresponding buy signal in the stock. The red bars mean that there's a corresponding sell signal. This process, entire process, takes less than a couple of minutes each night. So if you can't be in front of your computer, you can do this on a nightly basis and scan for the next day's signal. For example, if you would have had this presentation at the beginning of this month, just about 3 or so weeks ago, here's what you could have scanned for. Because scanning on the night of December 3rd, you would have scanned and seen that there was a buy signal in Apple. On 12/3, you could have scanned and seen there was a green horizontal bar next to Apple. Okay, so you would have seen, okay, well, we are above the 50. Rule number 1 is met. We closed in the top 25% of its range. And the remaining 2 rules have been met. So you had the choice there to buy the options, maybe buy the stock, or maybe if you are currently in the stock and you say to yourself, well, you know what, buy signal has been generated. I'm not going to sell this now, even though you may have gotten a little scared on this, drop here, on this little gap to the downside. This is telling you, not me, I'm not telling you to buy Apple, not some guy in a chat room, not some convoluted indicator, but the market is telling you that it wants to go higher. So you could have taken the choice to go along the calls or actually buy the stock. That would have been a wise decision some 3 weeks ago because the stock has risen 35 points and it looks like it's going to continue to go higher. It just keeps going higher. Now someone could say, how did you know that? Do you guys study, Apple? You watch it a lot? Are you in tune with the company? No. There are thousands of these signals being generated on a nightly basis. This is just one of them that you could have taken advantage of 3 weeks ago in Apple, and this is a current chart coming into yesterday. So here's the offer we want to present to you. This is our end of year 2019 offer. Remember, you're going to get 6 months of the platform free along with strategy number 4. And this comes with educational correspondence, my own personal email. You can contact me whenever you like, and I will answer any question you have concerning the course. Now, normally this would cost you close to $1,700, okay? This was included with the 6 months of the platform. We're going to slash that, and we're only going to charge you for this $695. That's including the 6 months of the platform. So for, $700, you can be up and running trading strategy number 4 the first day of the next year, even though we really want you to start paper trading first. But you could have all the rules, start studying it over this weekend, and be ready to go in the right direction for 2020. Now, remember, this is a great offer included with 6 months of the platform. Now, we realize that $695 may still be out of reach for some traders. Not to worry. We'll offer each and every one of you a payment plan. So if you want to put down a small deposit, a small percentage of $695, that's fine. Pro Trader Strategies would be more than happy to work with you. As the end of year, thanks to all of our students around the world, we'll give you a payment plan. So give them a call or talk to Pro Trader Strategies. They would be happy to work and construct something with you so that you can be up and running and you wouldn't have to come up with $695 altogether. You could still be up and running the first day of the year, of the new year, for a small deposit, okay? To contact them, I would probably suggest calling them at 310-598-6677. They would be more than happy to talk with you under no obligation. You're not required to buy anything just because you want to talk to them. So give them a call. There's no obligation required. They would be happy to give you any information on setting up a payment plan, okay? Now, the link you see at the very bottom is the sign-up page if you just want to take advantage of this. It also is not a live link, but we have posted a live link in the chat box on the far right-hand corner of the GoToWebinar column. So you can click that on, and it would be more than happy to take you to the sign-up page, okay? Now, I said I would take questions at the end. If you have a question for me, kindly go to the question and answer box, type it in, and I'll be happy to answer any and all questions that you have, okay? Hello to Ronnie. Hi, Ronnie. How are you doing? Let's see. David asks, the 50-period simple moving average in what time frame? Well, in what time period? Remember, one of the, not requirements, but one of the things that people always ask me is they'll say, like, Steve, in order to use this, do we look at a higher time frame and use a higher 50-period moving average and then apply it to what time frame we're trading? For example, if I'm trading an hourly chart, do I use the daily 50-period moving average or do I use a weekly? My suggestion is to only trade the time frame that the signal has been generated on. So in other words, if you trade hourly bars, then plot a 50-period moving average on the hourly time frame. There is no reason, as we stated in the beginning, to overcomplicate your trading. Why? Because in my own personal experience, I have found no consistency in using more than one time frame. There's absolutely no consistency. The only thing that has done for me in my own personal trading is to make me miss a lot of trades. So in other words, while I'm waiting for the lower time frame to coincide and be in sync with the higher time frame, I missed a good trade because I was waiting for them to be in sync. So my suggestion is trade the time frame that the signal is generated on and apply all indicators and all methods to that time frame. There's no reason to look at more than one time frame if you're a member or a student of mine. Absolutely no reason. So when someone asks what time period, it's the 50-period moving average of whatever time period you're looking at. If you trade weekly bars, apply a 50-period weekly moving average of that time frame. If you trade 5-minute bars, the way I do sometimes, then you would apply a 50-period moving average of 5-minute bars. That's how simple it will be, okay? I hope that answers your question. What will our renewal cost be after the first 6 months are up? That's a good question, George. Now, since Pro Trader Strategies handles all of the tech support, all of the costs and discounts, they would probably be better to answer this than I. I know right now the going rate, the generic rate is $97 per month. But because you're a course member, they may be able to work with you and give you a better discount. So I would talk to them. Remember, there's no obligation. They may be able to set up something even better than $97 a month, much less than that, okay? $97, trust me, I have traded other platforms before, used other platforms that have charged me close to $500 a month, and they don't meet half the information that we give our students around the world. So 97 is still a great deal, but I still think Pro Trader Strategies would be able to work with you on that as well, okay? That's a good question. Someone saying, well, what would I want to do if I want to enter my orders on a different platform? Well, a lot of our students do that. What they do is, for example, you may have, let's say, Metastock or TradeStation, or let's say you have Thinkorswim. What I would say the majority of our students do is they look at our platform, the educational platform, to get the signals and to learn from, and then when they get a signal that they want to take, they simply, toggle back onto the trading platform that will take their entered orders, and then they use that. In fact, that's what I do. I use our platform to scan, to look for setups, to look for different information using our features and our proprietary techniques. And then when I enter my order, I enter through my platform that I use, okay? But it's that simple. I would say the majority of the traders trade that way. And, a lot of students are asking, they're saying, what platforms can we apply this to? Well, if you want to get the up and down arrows, these are called the add-ons, onto your current platform, you can do that as well. That will come with the course. I wouldn't think it's the easiest way because our platform gives you so much more information. But you can apply those up and down arrows to TradeStation, Thinkorswim with NinjaTrader, Metastock, MT4, let's see, Sierra Charts. I would say probably all of the most prominent platforms you can use our up and down arrows with, okay? But remember, you're not going to get the buy sell line one click away, okay? You're not going to get the confirmation and just the ease of use that you get with our platform. So this is one of the great things about why we devised the platform, to make it simple, just to make it so simple. And the process you saw was that easy. You click on buy sell line, click on 50-period moving average, click on signal arrows, and everything is right there for you. It's one click away, okay? Now, in closing, I know this is the first strategy that was taught to me by my mentors, and I believe one of the things that has sustained me now for over 4 decades, because I use this on a daily basis. I use this morning. I use this just about every day in some capacity. But remember, this is not a system. A system requires everyone to trade the exact same way each and every time. You enter at the same spot, you exit at the same spot, you cover, you place your stop placement, you use the same money management. We do not believe, nor do we teach systems. What we teach are strategies. Strategies are 70% rule-based, but then we give you 30% allotted for your own insight and experience. So in other words, you can use one of the 7 different entry points as your experience. You can use one of the 7 different exit points, and one of the 7 different stop placement points. That's what we encourage. In fact, we don't want everyone to trade the same. We want you to get different results. Why? Because once again, going back to what I first said, that in my 40 plus years of trading is the only way one can become a consistent trader. Now, sure, you'll be able to buy some system, some $10,000 system from someone, and you may get a few great trades. And you'll say to yourself, boy, this is easy. I'm going to retire in the next 6 months. But most likely, you'll give it all back. That's been my experience, and that's been experiences we have from testimonials from students that say, gosh, I wish I had come to you guys a lot sooner because I wasted so much money searching for that holy grail, and some stuff would work for a little bit, and then it'd all go in the tube. I know what that's like because I did the same thing when I was struggling. The only thing that will sustain you is sound fundamental education about trading, and then you making your own decisions. We do not make the decisions for you. We simply provide you with the education. So going forward with that in 2020, I hope you decide to become a student of mine because I really want to see you trading, not just for a couple of years or, maybe a couple of even months, but for 20, 30, 40 years down the road. That's my goal for all of you as students of mine, okay? So in closing, as you take one last look at our disclaimer here, I want to thank all of you who are current students of mine, who are still studying with me, or all the new students of mine as well. And I really want to say we had a great 2019. We had some tremendous testimonials. We had some new features that we added to our platform and to new courses that we taught. And 2020 is even going to be better. We have some new things that are shaping up that we're going to be teaching you, new things that are going to take your trading to the next level. I really wish all of you a great, happy, and prosperous and healthy new year. And I look forward to all of you becoming students of mine in 2020. Thank you so much. Have a great year, and I'll see you next time. Bye-bye.